What's happening, everybody? It's your boy Creative. We are back at it again. Go ahead, say it with me to create something great. Now, today we're going to be working on episode 2 of our KreativeU series. This KreativeU is going to be breaking down different indicators, how to work on how to understand candlesticks, right? Really the fundamentals when it comes to algo trading. And today we're going to be working on SMA and EMA. So I'm super excited about what I have planned for y'all today. We're going to be using Cursor, and with inside Cursor, we're going to be using Claude Code. So if you're not already, I need you to like and subscribe, and we're just going to go ahead and jump on it. So we're going to open up our project. I already have the folder created for us. This is going to be KreativeU, EMA, and SMA. Now we're not going to use Cursor's AI. All right. So again, here at Creative Coder, our aim is to be able to create different algo trading bots, AI agents, machine learning, right? But sometimes you have to really get back to the fundamentals and understand what these different indicators are doing. So I want us to be able to really hone in and understand SMA and EMA today. And then we're going to build out a strategy using Claude Code, run a back test, and being able to run that back test on QQQ. QQQ is the top 100 tech companies within the NASDAQ. And just so we can have an understanding and look at an actual candlestick chart, right? I'm looking at QQQ and I'm looking at it on the 1 minute chart, and I'm using TradingView, right? So each one of these candlesticks represents 1 minute of action between the buyers or sellers, or how I like to say it's a battle, right, between the buyers and sellers. So the green candlesticks are going to represent the buyers or the bulls, and their aim is to be able to push resistance levels, right? Now, I know we talked about it before, but it's always great to have a refresher, right? So what's the difference between resistance and support levels? So when we're touching resistance levels, we're making higher highs, right? So that's the bull's aim, to be able to make higher highs. And then we're touching support levels. The bears are making lower lows, right? So they're pushing the price down. And then the bulls are pushing the price up. And there's also that other adage, you buy low, sell high, right? Another way to be able to support this. How funny. Huh. All right. So again, the green candlesticks are the buyers or the bulls, and they're pushing the price up. And the red candlesticks are the bears or the sellers, and they're pushing the price down, right? Another one of the characteristics I want us to be able to understand. You see this wick that's poking out the candle. Pause. My fault. Let's keep going. You see the wick that's poking out the candle, right? Now that's letting us know that the bulls tried to push it up to resistance levels, but it was rejected. Now, why was it rejected, right? Because the sellers or the bears came in and were competing within that mental battle, right? Even though it did close out green, so at the end of the day, they did win. But this long wick, right, lets me know that there was rejection at resistance levels, right? And then we have a couple of dojis that form, right? Doji letting me know that there's indecision, right? Even though it did turn green, right? But there's still indecision between the buyers and the sellers, or the bulls or the bears, right? But even though it's green, right? So it's letting you know that there's an upward momentum going on, but still to be able to watch out for there's indecision here, and just a little bit more indecision, just a little bit more pronounced, but there's still indecision, right? Same thing for now. Whenever you see these candlesticks here, right? So what's going on? Just looking. Okay, I'm going to come back here so we can really understand our candlesticks. But let's go ahead and go back to Cursor so we can start to break down EMA. What is it? How does it work? And what we're going to do when it comes to, like, we're going to build out a strategy for y'all. So what are moving averages, right? So imagine you are tracking test scores over the school year. Some days you get a 95, other days you get an 80, some other days you get an 88, right? It's all over the place. But if you average the last 5 tests, you get a smooth picture of how you're really doing. That's exactly what the moving average price is, what the moving average does with the price. Instead of looking at choppy up and down for every single candle, a moving average smooths it out so we can see the bigger picture. A simple version, if the price is above the moving average, we have an upward trend. The buyers are in control, right? So let's break that down a little bit more. So the price is above the moving average. right? So if the price is above the moving average, again, we have that upward trend. Bulls are in control, or the buyers are in control, right? So if there's a bullish market, we have an upward trend, right? If the price is above the the moving average, right? And the inverse. And then at that market, I would really want you to be able, again, this is not financial advice. If you do seek financial advice, please make sure you talk to a certified financial planner or those that can assist you with regards to being able to make your financial choices. This is merely educational. Now, there's always a question too, and I want us to be able to, let's go to our whiteboard real quick. Right? What is an algorithm? And I'm going to come back to an EMA, and I think this will really help us being able to break it down, right? So what is an algo? Oh, let me zoom that in so you can really see. My fault. So what is an algo, or what is an algorithmic? I'm going to say that word, algorithmic, option strategy, or an algo, right? It's an automated decision-making system for buying and selling options based on the rules that we design. Now, there's different ways to be able to design rules, right? You can use indicators, you can use price movement, you can use volume, you can use volatility, you can use IV, right? But the way that we're going to be building out our algorithmic trading strategy, right, is being able to use indicators in addition to a few other ways to be able to confirm the position, right? So what it does is turning our trading strategy into clear instructions that a computer can follow 24/7, right? And what we're doing is we're breaking down one of the indicators we're going to be using, and that indicator is going to be EMA and SMA, right? Excuse me. So again, if the price breaks above the moving average, we have an upward trend. The bulls or the buyers are in control. If it breaks below, we have a downward trend and the sellers are in control, right? If the price crosses above, the price crossing the moving average, this is a potential trend changing happening. All right. So what's the difference between SMA, simple moving average, and the EMA, the exponential moving average, right? These are the two main types of moving averages. I mean, there's also WMA, RMA, TMA. It gets real crazy when it comes to like using different moving averages, but we're going to keep it simple here. We're going to use the two main ones, which is the simple moving average, SMA, and the EMA, the exponential moving average, right? So, simple moving average. This is the fair teacher. So imagine a teacher averaging your last 5 test scores. Each test counts equally. Test 1, 80, test 2, 85, so on and so forth, right? So the SMA is going to take the average or the mean, right, of the last 5 test scores, and then you have an 87. Every test counts the same, fair and simple. The SMA treats every price candle equally, whether it happened 20 bars ago, 20 minutes ago. Each bar represents 1 minute of action, what we're going to be using here, right? So if it says 20 bars ago, just 20 minutes ago, or just now, they all count the same. The exponential moving average, right? What have you done for me lately, teacher? Right? Now imagine a teacher who cares most about your recent test scores, right? So test 1, 80 counts a little more. Test 2, 85 counts a little more. Test 3, 90 counts more, right? Test 4, 89 counts even more. And then the latest test, 92, counts the most, right? So the EMA is the weighted calculation and approximately equals 89. See, the EMA of 89 is higher than the EMA of 87. Why? That's because the EMA cares more about what have you done for me lately, right? Your recent 92, while the SMA treats the old 80 just as important as your recent 92, right? So the EMA gives us more weight to recent prices. It reacts faster to what's happening right now. So side-by-side comparison. So I wish this was a bit better. My fault. I will do better next time where I can actually have it spread out, but let's go. So the full name, we have SMA, which is the simple moving average. And then we have EMA, or you can also say smooth moving average, right? I've seen schools of thought whether it's smooth, it's not just simple, but simple, smooth, same thing, tomato, tomato, right? And then we have the EMA, the exponential moving average. All prices are counted equally. The EMA, recent prices count more. The speed, slower and then smoother. And then for the EMA, faster and more reactive. The lag, there's more lag in the EMA, right? Because it's treating all 5 periods or all 5 tests the same. Whereas the SMA, whereas the EMA is there less lag. False signals, you're going to have fewer. and the SMA because it's all treated equally, whereas the EMA, you're probably going to have a little bit more. Best for identifying trends and best for catching quick moves, right? So the nickname is the slow one and the fast one. So visual representation. So this is the price action. We're going to call this QQQ. Remember, QQQ is the top 100 tech companies within the NASDAQ. Let's go look at a few of their holdings real quick, right? So we can really understand QQQ. QQQ holdings. Holdings. All right, so here's some of their holdings. Here's some of the top 10 holdings. Let's just look at all the holdings, right? So we have NVIDIA, Apple, Microsoft, Broadcom, Amazon. This is Google. Don't ask me why. Google is considered and call themselves Alphabet Incorporated Class A. This is YouTube. How funny though, right? Class C, Tesla. This is Facebook. I will never call them Meta. Netflix, Palantir, Costco, AMD or Advanced Medical Devices, Crisco, Micron, T-Mobile, Applied Materials, AppLovin, right? So you can see like a vast amount. Airbnb, right? Raw Stores. So you can see Workday, Excel, Paychex, Coca-Cola. Really vast amount of tech companies. Old Dominion Freight Line, right? A trucking company. That's funny. I was trucking tech, but that's kind of cool. I just noticed Old Dominion was in there. Lululemon, right? So you can see very diverse set of ETF that allows us to be able to trade or be invested in these tech companies. And what is an ETF? An ETF is an exchange traded fund. Think of an ETF like a quilt, right? And each one of the quilts represents a different company. This particular quilt has 100 different companies, right? So if we wanted to invest in, let's say, for example, NVIDIA or Apple or Microsoft, I will have to buy each one of those individual positions, but being able to be invested in an ETF allows us to be vested in those positions without having to buy the individual one. So that's why we like using ETFs. All right, so let's talk about the visual representation. So this is QQQ, right? And then we have a price spike that's here. The SMA response is barely noticing it, but the EMA response reacts quickly to what's happening, right? So when the price spikes, EMA jumps up fast while the SMA slowly drifts up. So when the price falls back, EMA drops fast while the SMA slowly drifts down. So an easier way to be able to remember it, right? EMA is the early movement alert, right? Early because it reacts to the price changes quickly. Movement because it catches moves sooner, alert because it warns you first, but sometimes we catch false alarms, and that's where we're going to use our confirmation, right, to be able to make sure, hey, is this really a signal or are you pulling my leg, right? So SMA is the slow measured average, right? I wish they would do that a lot better, but slow measured average. So slow because it takes time to react, measured because it's steady and less noise, average, the true middle ground over time. So the rabbit and the turtle. So another, to be able to really break this down, EMA is going to be the rabbit, fast, jumpy, and reacts to everything. And then SMA is going to be the turtle, slow, steady, and ignores the noise. How to use this? When you want to catch a quick reversal, you want to use the EMA or the rabbit. And we want to confirm we have a real trend, we're going to use the turtle, SMA. Smart traders, we use them both together, right? So now we're going to talk about periods, or periods is just the number of bars, right? The number of minutes between the EMA and the SMA. So we're going to talk about the most common periods used for EMA and SMA, right? So a period is how many bars, candles that the average is looking back at, right? So let's give a real example. So normally when we're using zero DTE strategies, and what is a zero? I should just stay over here. And what is a zero DTE strategy? So what is an option contract? So let's just start here real quick. So an option contract is like a ticket that gives you the right, but not the obligation to buy or sell a stock at a specific price. What is that specific price? Is going to be our strike price. And this is the price we think the underlying option contract is going to go to before a certain date. What is that certain date? Our certain date is going to be our expiration date, right? We trade zero DTE options. These are same day options. These are option contracts that expire the same day, right? So an option contract, we don't own the stock yet, right? We just own the choice whether to buy or sell it later, depending on how the market does, right? And again, I should have just kept this over here. I don't know why I brought it, whatever. All right. So when we're looking at periods, right, or zero DTE contracts, I don't like to use more than 12 periods. So let's count one, and each one of these represents 1 minute of action or one period, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Thought I counted it. 11, 12. Beautiful. So we're going to use these 12 last candles, right, in order to determine what QQQ is going to do next. And we're using QQQ, again, the top 100 tech companies within the NASDAQ. So we're using these 12 candles in order to figure out what kind of trend is going to happen and what we think the price is going to do, right? So we're probably going to use SMA, the simple moving average, in order to determine the trend, right? And then EMA in order to determine, hey, do we have momentum behind that trend, right? Whether it's an upward momentum, right? Are the bulls in control? Or is a downward momentum? Are the bears in control, right? And then once we figure that out, we're either going to buy we're going to get to that. So just a little bit further, options is an ownership, it's controlled. We're paying for the right to choose on what to do later based on how the market moves. And for every one option contract, there's 100 shares. Zero DTE, we already talked about that. So once we find out if there's going to be an upward or downward trend, right, we're either going to buy a call option. A call option is the right to buy a stock at a set price because we think the market is going to go up. If we're buying a call option, we're bullish on the market because we think that the market is going to go up. Now, normally, generally, right, when a stock price goes up, call options go up, right? So that's why when we're bullish on an underlying asset, we're buying call options. Now, when we're bearish, right, on the underlying asset, we're going to buy put options. Now, put option is a right to sell a stock at a specific price when we think the market is going to go down. Again, bearish, we're buying put options. We think the price of the market might go down. Now, generally, when stock prices go down, put options go up, right? So what we're doing is we're using these last 12 periods in order to determine, hey, what's the trend? Is it bullish or bearish, right? That lets us know, that lets the strategy know. And what is an algorithm, right? An algorithm is an automated decision-making machine for buying and selling options based on the rules we design. So one of the rules that we're going to design is using the last 12 bars, right? Using the last 12 candles, we wanted to confirm, okay, what market are we in, right? What regime are we in, right? Are we in a bullish regime? Are we in a regime where we have an upward trend, right? Or are we in a bearish regime, right? Are we in a regime where we're going to have a downward trend? And once we do confirm what market are we in, right, then we're going to use EMA in order to determine, okay, where's the trend going? Oh, excuse me, the up or the down, right, trend, or excuse me, the upward or the down price movement, right? Because it cares a lot more about the recent prices, whereas SMA cares more about the bigger picture, right? So we're going to use SMA in order to confirm the trend, and then EMA in order to confirm, do we have momentum going upward or downward, right? Does that make sense? All right, beautiful. Now let's go back to cursor. Now we talked about periods, right? Now here's some of the most common periods and what they mean. 5 is the last 5 minutes. This is ultra fast. This is a very short-term momentum, and it's commonly used for scalping strategies, right? Period of 8 is a fast, right? Short-term direction and zero DTE strategies. We talked about zero DTE. These are option contracts that expire the same day. Now we have EMA of 9. This is fast. Well, I would consider fast, right? But I mean, still kind of medium to me because I don't go past 12. Anything past 12, especially for zero DTE. Why? Because these are option contracts that expire the same day. So it's not like regular contracts, weeklies or monthlies or dailies, right? Where you have a little bit more time baked in and you can afford to use a 20, 21, or 50, right? But again, for our stretch, I normally don't go over 12, 13, 15 will have to be a special case. And we'll see that when we're building out this strat for our EMA strategy we're going to be building here live with you. So let's keep going. And then we have 13 medium fast intraday movement, zero DTE confirmation. I mean, I would beg to differ. I like to use 12. I get a lot more action with 212, but we'll get to that period point once we're actually building out the strat. 20 medium, short-term trend, day trading standard. Excuse me. 21 medium, monthly trending. Monthly trading days, swing trading. What is the difference between swing trading and scalping? Now, scalping normally means you're going to be in and out the position in under 5 minutes. Some people like 15 minutes, but normally under 5 minutes, right? Swing trading is going to be more like daily trading or weekly trading, right? It's a longer position. So scalping or short-term position, right? Swing trading or long-term position, right? EMA 50, super slow. 50 minutes, bro. 50 minutes. So 5 minutes, 8 minutes, 9 minutes, 13, 20. Period. Thursday period, right? Think of minutes whenever we're talking about averages or any type of indicators, right? So 21, now 50 minutes, ultra slow, medium trend, big picture, intraday. 100 minutes, very slow, long trend, major support and resistance. And then 200 minutes, ultra slow, major trend, the king of the EMAs, because it's using 200 minutes. Like really, really looking at it. So let's look at the common EMAs and how the periods affect the moving averages. Short period, an EMA of 8, it hugs the prices closely and everything wiggles, right? So here's the price and here's the EMA, right? So an EMA of 8 or the last 8 minutes is looking at the last 8 minutes of action. Let's go here so we can really break this down. So 1, 2, 3, 4, 5, 6, 7, 8, right? So an EMA of 8 is going to take the last 8 minutes of action, and then it's going to take the average of it, right? So if EMA, so which one cares more about the most recent action, right? Go ahead and put that in the comments so we can make sure that you're following along, right? It's the EMA. So EMA cares more about recent action, right? Whereas SMA is going to care more about the entire picture, whereas EMA is going to put more front load weight on the more recent action, right? So the more recent action, if we're using EMA of 8, this is probably going to let us know, hey, there was an upward trend with a slight pullback, but the market is looking like an upward trend, so maybe entering into a call position. This probably would have triggered it, right? I mean, somewhere over here would have triggered it, trigger the signal, right? Trigger the rule in order to say, hey, I think I have a signal here, and then we would use estimate in order to confirm it, and then maybe volume as well in order to make sure there's enough people, right? Enough activity going on in order to ensure that, hey, this is a valid signal. Does that make sense? All right, beautiful. So long period, we have EMA of 50. That's crazy. Here's the price, and then we have it where it's a lot more smooth, right? Because you're using 50 minutes, not necessarily 8, right? So the longer the period, the more smooth. The shorter the period, the more closely it hugs the price. So think of it like this. A short period is looking at the last week's weather, whereas the long period is looking at the whole season's weather, right? So for 0 DTE trading, which periods matter the most? So on a 1-minute chart, this is the chart that we're going to be using. So I'm going to skip over 5 because I normally don't use 5. I want to get to a point where I want to use multi-time frame strategies, but again, that's a little bit more complex. And I think I haven't seen that much return for it. So that's why I kind of stick to the single time frame. And a time frame that I like to use is 1 minute, meaning that every candlestick or every bar, right, represents 1 minute of action between the buyers and sellers, right? So this is the one we're going to stick to, and we're just going to hop over the 5 minute until we're using multi-candle, right? All right. So for 1 minute, again, I would go a little bit more aggressive here. So 8 minute is going to be 8 bars. And this is quick scalps, but I would beg to differ is that we can probably go to 3, 5, even 2 sometimes, right? And it's depending on how aggressive you want the EMA, the exponential moving average, to be able to hug the price. So this is 8. 2 is going to be super tight, right, to the price, right? 13, again, anything past 13 I probably wouldn't use. This is just caution, right? Because this is just a little bit too long. We're waiting 21 minutes in order to get action, 50 minutes in order to get action, 100 minutes in order to get action trading, right? 1.5 hours. So again, this is something I probably wouldn't use, but let's just go over it, right? 13 bars is 13 minutes, entry confirmation, and this is probably where I'll stop. 21, it's depending on the strategy, so let me not say that. 21 bars, so 21 minutes, short-term trend, 50 bars, 50 minutes, an hour trend, 100 bars, 1.5 minutes, a session trend. And normally our strategies or our bots normally trade for like maybe 2 hours max, right? So we'll get into that. So here's the math behind the moving average. Don't worry, the calculator does this automatically for us, but understanding it helps us to be able to trust it, right? So SMA, the simple or smooth moving average, is that the price 1, price 2, so on and so forth, and then divided by the number of periods or N, right? So if we have 5 periods, right, or 5 bars, right, it's going to take the last 5 bars and then just do a simple average, right? The next bar is the oldest bar, drops off, and the new bar gets added if it's 5, right? So it just stays to that confine of 5, right? Because we didn't give it flexibility to be able to move a little bit more. So 5 period SMA is going to take the last 5 bars, take a simple average of it, and say, okay, you know what? The average is 451. If the price goes above the average, right, we have a bullish trend. So I want us to be able to do what? To buy a call because we're bullish on the market. But if the price goes below the average, we have a bearish trend, and I want us to do what? To buy a put because we're bearish on the market. We think it's going to go down. So for EMA, it uses a smoothing factor that weighs the recent prices more. So smoothing equals the 2 divided by the period plus 1. So today's price times smoothing plus yesterday's EMA times 1 divided by smoothing. So example 5 EMA. So 2 divided by, okay, we have our equation here. So this means that today's price counts 33% and the previous EMA counts for 67%. So recent prices have more influence. Why does this matter? The price suddenly spikes. The slow EMA rises slowly. The SMA rises slowly, but the EMA jumps up quickly. The price suddenly drops. The SMA slowly falls, but the EMA drops quickly. The trend chops sideways. SMA slightly relatively flat. I call it fat. The EMA wiggles more. And then when we have a trend that's starting, right, the SMA lags, whereas the EMA catches it faster. And then we have a trend that ends, the SMA again will lag behind, and the EMA will catch it faster. So for 0 DTE, EMA is usually preferred because you need speed, right? And you don't have time to wait for the SMA to catch up. So that's why we normally use SMA or the simple moving average to be able to confirm a trend, right? So here's how to read it from real examples, And we're 10 a.m. and we're using SPY. SPY is the S&P 500. This is the top 500 companies within the New York Stock Exchange. So at 10 a.m., SPY is at 450. The 8 EMA is 449.50. 21 is 449. And then 50 is 448. So if the price is greater than, and this is a lot, this is like super confirmation, bro. Like you could probably use 2, but I get it. So if the price is greater than the 8 EMA, greater than the 21 EMA, and greater than the 50 EMA, we have an EMA stacked bullishly, right? This is a strong upward trend. Only look for calls by pullbacks to the 8 or 21 EMA, right? So what does that mean? The price is currently at 450. What we're waiting for is the price to be able to break above the average. If it broke above the average, right, at 450, ding, 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 ding. Now it just broke above. Now we have our signal that triggered, and now we're ready to be able to enter into a call position. But again, there's a lot more to be able to make. And this is a simple trend confirmation, right? So what this means, when the EMAs are stacked in this order, the short above the long, the trend is healthy. So example of an EMA crossover, right? So does that make sense? Beautiful. So example 2 is the EMA crossover at 10:30 a.m. EMA crosses above EMA. Now this is what I love using crossovers, right? Because I think this is my little and one moment, right? This is like, all right, shooting with me in the gym. All right, let me shut up. So EMA crosses above the 21, and the price is at 450. This is a bullish crossover, also called the golden cross on bigger time frames, right? Because the buyers take control, we buy calls, and we stop if the EMA crosses back below the 21 EMA, right? That's an interesting way to be able to have a stop. What this means is that the fast average is catching up and passing the slow average, and now we have momentum is shifting. And then example 3, we are testing an EMA or testing support levels. So remember, what is support? Support is when we are testing lower lows, right? So support, testing lower lows, resistance, testing higher highs. So the morning, there's a strong upward trend. The price is well above all 3 EMAs, the 8, 21, and 50. And at 11 a.m., the price pulled back to the 21 EMA, right? So the EMA, the 21 EMA is 450. The price touches 450.10. Then this acts as the support. We buy calls because we think it's going to bounce, right? It has a bullish momentum there. And then our target is going to be the previous high, and our stop is below the 21 EMA. What this means is that there's a strong upward trend. EMA acts as the floor, right? The support level. And then once the price bounces off them, that's when we get in. Resistance, morning downtrend. All the prices are below the EMAs. At 11 a.m., the price bounces up to the 21 EMA. 21 EMA is 448.50. The price touches 447.90 and gets rejected, right? That's when you see those wicks pull up. So if the 21 EMA acts as resistance, we buy puts on the rejection, target the previous low, and we're going to stop when it gets above the 21 EMA. What this means is in a downward trend, the EMA acts as a ceiling and the price gets rejected. So EMA with a compression or a squeeze when all 3 of them are bunched together. All EMAs are converging, all almost touching each other. This is a squeeze and a big move is coming. So direction is unknown. We wait for the breakout, then we follow it. What this means is when the EMA is bunched up, energy is building. And this is the next move is often going to be explosive. So the moving average behavior in different markets, right? So a strong trending market. So this is an example of when all the EMAs are going to be above it. This is our price. So an example of all 3 EMAs trending upwards. And this will let us know that, okay, this is a great time to be able to buy a call position because we're bullish on the market. Price really touches the 8 EMA, pull back to the 21 EMA as buying opportunities. And if price breaks below the 50 EMA, the trend may be ending, right? A downward trend is just the inverse. Then we have an example of a choppy days, right? How EMA is just going to be bouncing off support or resistance, right? And then we have the transitioning days when the morning we have the price above all EMAs, which shows us an upward trend. Then midday, the price crosses below EMA 8, then 21, then 50, right? Then afternoon, we have prices below all EMA. Then we have a downward trend. So the EMA will start to roll over and eventually stack bearishly. So what we'll do is we'll watch for the sequential EMA breaks. First, we'll watch for the EMA 8, 21, and then the 50. So the 8 is the warning, the 21 is the confirmation, and then the 50 is the trend is reversed. So here's some popular EMA combos, right? 821, we have our fast and slow EMA, best for scalping at 0 DTE trades. Time frame is going to be 1 and 5 minute charts. How to use is when the 8 crosses above the 21, we're going to look for bullish, right? We're going to look for calls because we think the market is going to do what? Go up. And when the 8 crosses below the 21, we're bearish and we're looking for puts. And the crossover is our entry. Classic for day trading, right? So what I want to do, institutional 2050 and then the triple EMA, we're going to go down to being able to go over different EMA strategies, but I have one that I want us to use as a basis. Here we go. All right. So we're going to be building out our strategy now that we have a firm, great understanding of what EMA is and how it works, right? And we're going to be using the EMA cloud trading, right? The concept is the space between the 2 EMAs acts as a cloud or support or resistance level. What a support is when it is trying to touch lower lows. Resistance is when it tries to touch higher highs, right? We're going to be using different EMAs here, right? So the fast EMA is going to be probably a lot faster. Slow EMA is going to be a lot faster. How ironic. A bullish position is when the price in or above the cloud, the 821 zone, And the bearish position is when the price is in or above the cloud. The way we enter is when the price touches the cloud and bounces, and our target is the expansion. Here's an example. Upward trend is the 8 is above the 21. So 451, 450. The cloud is the zone between 450 and 451. If the price dips from 452 into the cloud at 450.80, then we expect the price to bounce back up. We buy calls and acts as support, and our target is 452 plus, and our stop is going to be a little bit more better than that, but our stop is going to be when the price falls through the cloud, right? Why this works: the zone between the EMAs represents the recent fair value, and a strong trend represents this zone, right? So what we're going to be doing now is using Claude Code, the Opus model, Opus, tomatoes, tomato at this point, the 4.5 model, so we can actually build out our strategy. So what I want to do, let's go ahead and close this out. Beautiful, using the Opus 4.5 model. So what we're going to do is just build some preface, right? So we already know about EMA, but I want us to be able to get more context from the AI just to make sure they know about EMA, which they should, but hey, you never know. What do you know about EMA and SMA for option algo strategies? Explain like 12 in a non-condescending nor demeaning fashion, like a professor talking to their student. All right, what I need to go do is, in the interim, I need to go get the example back test real quick, right? Because we're going to be back testing. What is back testing? Being able to drop our strategy in a particular year and making sure how well it performs. All right, so let me explain these concepts as I would to a student learning quantitative trading. We have our simple moving average. This is the algorithmic mean of the price over the look back period. If you're using a 20 EMA, you're using the sum of the last 20 closing prices and divided by 20, right? And then we already talked about this. Let's go over quickly. The EMA acts as the exponentially decreasing the weights for the older data. The formula using a smoothing factor, right, where n is the period. We already talked about that. Beautiful. Now what I want to do is go back to our cloud, and we're going to use this as the basis to be able to build out our strategy. All right, I'm going to copy this. Now I'm going to say, all right, bet we want to build a 0 DTE QQQ option strat based on the following. We're going to be using 1 minute time frame. Let's start to discuss what will trigger a bullish / call or bearish / put. Also, max period that we're going to use is going to be 12, and thinking of starting at fast EMA 2 and then slow EMA 12. Let's discuss working on the entry first before we get to the other parts of this. All right, so what we're going to do now is just wait for the output and make sure our Claude Code is Gucci and it understands what we're trying to do here. Now, for this next part, we're going to be actually building out an EMA SMA strategy. Beautiful. All right, let's work through this systematically. You're proposing a tight cloud around the original 212 versus the 821. This is significant implications. The 212 cloud on 1 minute charts. This gives us the 2 EMA is essentially tracking the last 2 to 3 candles, with heavy recency bias, and I know, just follow me. The 12 EMA smooths out the last 12 to 15 minutes of price action, and your cloud will be narrow and reactive, right? The trade-off, faster signals, more entries, but also noise slash signals. Who knows? Let's see. The original 821 is wider, providing a clearer zone of support and resistance. With your 12 to 12, the cloud may be collapsed or flat very quickly on a 1 minute chart. Defining the bullish defining the bullish call entry. For the call entry, you will need to establish the trend confirmation. Is the 2 EMA above the 12 EMA? The cloud is bullish. The pullback into the cloud, the price drops from above and enters the cloud zone between the 2 EMAs. The bounce confirmation, the price shows rejection from the cloud, but how do we define the bounce? The key question, what constitutes as a valid bounce on a 1 minute chart? So the price touches the cloud and then the next candle closes above the 2 EMA. The price, or we have options to be able to select from, right? And this is building out the strategy, right? So I don't want this to get monotonous. If you do have any questions, you go ahead and put them in the comments, but we're building out an algo strategy, right? So this is the rules and instructions when it comes to building out an algo strategy for when using EMA as the foundation of it, right? So we're building out an EMA cloud strategy for QQQ, right? And QQQ, the top 100 tech companies within the NASDAQ, and 0DTE options that expire the same day. Beautiful. All right, so second confirmation, 2 EMAs above the 12, acting as a cloud. The pullback into the zone. Okay. The price enters the cloud, then the candle closes with a higher high than the previous. I don't know if I like that. The price touches the 12 EMA, the bottom of the cloud, and then the next candle is green. Probably C, or we're going to wait for full exit of the cloud on the upward side. I'm probably going to go C. The price touches, and I don't know if I want to wait for the next candle to be green. Bearish. So questions for you. How aggressive do you want the entry? Option A, fastest. We want it to start aggressive, so we'll start with option A, 1. 2. Should we require the cloud to have a minimum width like 2-1 on a 1 minute card? The EMA might be nearly touching during consolidation. That's low conviction. Okay. What do you believe would be an appropriate aggressive start regarding the min width? 3. Do you want a trend filter beyond just the EMA relationship? For example, only take calls if the price is above the 12 EMA on higher time frame. No. Probably. We're thinking of using SMA as the trend confirmation such that it guides / works with EMA. Let's discuss. All right, beautiful. Right, so you're seeing a strategy being created and developed, and our biggest aim here is to be able to see, okay, we have a strategy in mind. Now let's create the strategy using AI, right? We're going to backtest the strategy and we're going to see how well it performs, right? All right. All right, entry, confirm the entry signal. The price touches the cloud. The next candle closes above the 2 EMA. For puts, the price touches the cloud, closes below the 2 EMA. Fast minimal confirmation. We can always tighten later if it's too noisy. The minimum cloud for aggressive starting point, I'll suggest 0.25 of the price of the minimum width. So QQQ is at 500. The minimum cloud width is 25. If QQQ at 480, the minimum cloud width is at, okay. This filters out the moments when the EMAs are essentially flat, aligning on top of each other, consolidation or chop, but doesn't require a massive spread that would reduce your trade frequency. More aggressive, right, but more conservative. Let's find a middle ground. Maybe let's do like super aggressive. I want to do 0.02 for the minimum cloud. So which one feels right to us? We can tune this later on backtesting. SMA as a trend. Let's discuss. This is a smart addition. Here's the idea. The EMA is going to be the tactical entry, right? And then the SMA is going to be the strategic trend confirmation, right? So how it'll work, if the price is greater than the SMA, the bullish cloud bounces, take calls. If the price, wait, am I tripping? That's greater, right? That's greater. Oh, skip puts. Okay, bearish cloud bounce. Okay, price is less. Take puts. Okay, beautiful. Given your max 12 periods, your options are limited. 12 EMA looks back at your slow EMA, provides alignment. 10 SMA is slightly faster, more trade opportunities. 8 SMA even faster, but might not filter too much. Alternative thoughts, since you capped at 12, what about using a 12 SMA and comparing it to the 12 EMA? That's interesting. We can do that. I like that. All right. 1, simple, period, which appeals to you. 2, appeals to us. Now let's lay it out before we provide you with the reference backtest to build out this strat. The reference backtest will have exits, option, selection, etc. We're not taking the strategy, rather the other items to build ours out. But let's finish here. All right, beautiful. We're getting to a point where we're really going to be like building out our strategy with EMA and SMA. EMA is going to confirm the price. SMA is going to confirm the trend. All right, beautiful. So EMA cloud strategy. So the fast EMA is going to be 2. Slow EMA is going to be 12. Then the trend filter is going to be the EMA 12 versus the SMA 12. And that when's their divergence, the time frame is going to be a 1 minute. Oh shit, I forgot to tell it 0.2, but I want to tell it. All right. So the cloud is bullish. The 2 is greater than the 12. The momentum confirmation is the 12 EMA is greater than the 12 SMA. Momentum is accelerating upward. The cloud width is valid, right? Okay, beautiful. The pullback occurs. The price enters the cloud zone between the 2 and 12 EMA, and then the bounce is confirmed. The next candle closes above the 2 EMA. We're going to buy a call, and then the inverse for a put. A visual representation is here's the price. Price enters here, then bounce. Here's the cloud. Slow. Okay, 12 is greater than the 12 EMA is greater than the 12 SMA, excuse me. This is our momentum filter to be able to make sure that there's real momentum and it's not exhausted. This is a bullish setup. Here is a bearish setup, right? Does this accurately capture what we've discussed? Is there any discussions before you share the reference backtest? Yes, just one. We are going to start with a minimum width of 0.02, not 0.05%. Got it? Perfect. All right, let's bring in our reference backtest. And I'm going to go over them so we can like actually see it. So here's one. This is not even DIA no more. This is QQQ. Okay, this is, hold on, let me just update that. And then what I also want us to be able to do is bring in, give me a second. Here's 2. All right, you have enough. And we're going to review them real quick so we can see. Review the following reference backtest. All right, then let's discuss. All right, let's go to ID and recommendation. If you've seen, you should, if you know what that's from, shout out to you. All right. This is a 0 DTE QQQ option price and volume breakout strategy. The strategy is the price breaks out strategy and adapts to the 0 DTE. So how we enter is the price breaks above the 5-minute bar. We have a price breakout, and then the volume confirms it at the 7 bar, right? The volume confirmation, and then the price breaks above the another SMA strategy. That's what's up. So wait, I'm gonna come back here. Let me just damn. Damn it, damn it, damn it. I hate when it does this. Okay. I can barely see y'all. Hold on. You mentioned QQQ, but this. All right. I can't see your questions. Redo and advise. Can't really make out your questions. Whoa. I forgot it does that. My fault. I'll put your questions again. All right. This is the path. Yes. That's where QQQ is located. Yes, that is where QQQ is located. Option selection. Yep, we're going to do the same. And what does delta tell us? Delta tells us the probability of profit, and delta also tells us in relation to the stock or the ETF movement, how does the underlying option contract move, right? So at the probability of profit, we're having a 12 or 40% chance of this underlying option contract being profitable, or for every $1 movement, it's moving $12 or $40, right? So we understand that bit. And then premium, we're only buying option contracts that are between $15 and $50. Remember, there's one for every one option contract, there's 100 shares. So you just multiply it by 100. Take profit. Okay. So 2, yes. Let's start here. 3, take profit levels. This is how we're going to exit the position, right? So let's do for take profit 1, 20. 5.8%. And I like to have 2 take profit levels, right? Multiple ways for the strategy to get out the position. Take profit 2, we're going to have 15. No, let's do 14.3%. And then SL or stop loss is where all of our strategies start at $100, right? Until told otherwise. So if the strategy goes from 100 and we want our stop loss to be 10%, to $90, get us out of the position, and don't hope and pray that the position is going to turn and be profitable, right? Let's get out and just make sure that we just live on to fight another day, right? Knowing the journey is over, as Tom Brady would say. So, but I'm not a Patriots fan. Kind of a Bucks. I don't know. More of a fins up. Don't even know where my loyalties lie. But all right, let's keep going. So stop loss is going to be 10%, and then our maximum hold time is going to be 3 minutes. So we have 3 minutes to either take profit. If it's stop loss, get me out. Or if we're just after 3 minutes, get me out at market, right? Market price. And then session. The strategy is only going to trade between 9:31 a.m. and 10:58. Yes, keep the same. 1 trade per day, and yes, use the same tiered for position sizing. Got it? Yeah, because I couldn't make out what the heck that was saying. All right. Beautiful. So 212. All right, I love it. Call. I love it. I love it. Our exit rules. All right. So what I want to say is, you see how comprehensive the output metrics are for here are used in this backtest. Let's make sure we do the same and have the same level of doc strings and logging so we can understand every part of the backtest, like we're 12, and also see how the data is loaded. So we are not waiting eons for the backtest to run. Got it? Let's call this backtest. This my mixtape. On the cloud9 cloud9bt.py, and proceed to create. Type. All right, beautiful. So we're having Cloud Code create our backtest, and we're going to be running our backtest on 2024, right? So we're using QQQ. QQQ, again, just to be able to reiterate it, the top 100 tech companies within the NASDAQ. And we've already laid out our parameters, right? We've already laid out, this is our rules, right? So we talked about what is an algorithmic trading strategy, right? It's a set of rules of instructions and automated system based on rules of instructions to allow us to buy and sell options, right? So what it does, it allows us to be able to take our trading plan so a computer can watch the underlying stock 24/7 or asset 24/7 and being able to follow the rules, right? So these are the rules, right? This is how you get into a call. This is how you get into a put. This is the metrics in which you follow, right? There's no wiggle room, right? Right. We're trading QQQ. This is how you select an option when the signal actually triggers, right? This is how you exit the positions, right? So there's no guesswork. This is the session and position management. So we're only trading between 9:31 and 10:58. So you have almost about 90 minutes or so, 88 minutes, right, to be able to either find a call or put. If you can't, you're done for the day. Excuse me, we don't overtrade. We are doing one trade per day, and then we're doing tiered position sizing. So what does this mean? If the position, we're starting with $100, right? So understand that. So, but if the portfolio, you can use up to, you can use up to 88% of the portfolio balance if it's less than 499. If it's between 500 and 1000, you can use up to 55%. And if it's between greater than 1000, you can use up to 22% of the portfolio balance, right? So what we're going to do is get our terminal ready so we can run our back test. What I want to do is now we got to get our conda environment. A conda environment acts as a garage for all the Python libraries that I'm going to need in order to run said back test, right? Now I'm going to install my them. All right, we're Gucci. Now let's go ahead and grab the clouds.py, run a console, run a Python. Beautiful. As soon as it's ready, now we can just run it. And another moment or so, we're going to be able to run our back test, and it's going to be Gucci. So I'm interested to see how this is going to perform, right? So we're going to be running our back test on 2024. We already have our rules. We already have our instructions for the strategy. And then it's going to provide us a comprehensive overview on how the strategy did. And then what we're going to do is just like, again, we're building on the work that we've done. This is SMA and EMA, right? EMA is going to confirm where the price is going. SMA is going to confirm the trend, right? So we're going to confirm, all right, do we have a breakout? Excuse me. So looking at the past, so this is 8, so that's 9, 10, 11, 12. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right, bet. So looking at the last 12 periods, right? I'm going to say the first two, right? Whenever the first two bars crosses above the entire 12, we have a bullish signal, right? So we think the price is going to go up. And what I also want to confirm is we're going to take the EMA at 12, and if it's greater than the EMA of the SMA of 12, then that lets us confirm the signal that it's going. So that's going to be a bullish signal. And then if the inverse happens, right, if the first two candles or if the first 2 minutes crosses below the entire 12, right, the entire 12, then we're going to be having a bearish signal. So that's when we're going to be buying puts, right? So this is just one of our rules and instructions that we're allowing the strategy to do. And then we already have our tiered exits, right? And the reason we're using 2 exits is because I want the strategy to be able to have multiple ways to exit, right? So just because we have an exit, let's go back to Claude Code. So just because we have these 2-tier exits, sometimes we can exit at 80%, sometimes we can exit at 12%, right? Sometimes we'll exit at 30%, right? So this is just the minimum amount that we'll accept in order for the position to exit. In just a few moments here, our Claude Code is going to be done. We're going to be, here we go. Let's review. Oh, before, hold on. Okay, I want to make you do that after, but all right, bet. So this is the clouds backtest, right? So a 0DTE QQQ option EMA strategy, how it works. So the EMA cloud trading strategy for 0DTE options, this cloud is the zone between the fast and the slow EMA. We trade the bounces off the cloud when momentum confirms it. The concept, the space between the 2 EMAs acts as a dynamic support or resistance level, right? Support is when it's touching new lows, resistance is when it's touching new highs. And an upward trend, the price pulls back up to the cloud and bounces. And a downward trend, the price rallies to the cloud, and rejects it. And we use the SMA divergence filter to confirm the momentum. So the EMA components, it tracks very recent price movements with the EMA of 2. The EMA of 12 smooths out the price history. And then the cloud space, the fast EMA and the slow EMA, and it must be greater or equal to 0.2. Here's our momentum filter, and here's how we get into the position. Now, I know y'all are excited, so let's just go ahead and run our back test so we can see how it actually performs. Again, we're running our back test on 2024. And what is the back test is being able to take your strategy, drop it off in a time machine, and seeing how well it does on historic data. If it does well in the past, there's a high likelihood that the strategy will perform well in the future. Now, I am not going to hold you. Today is a day. Okay, here we go. Oh, 2022. That's wait. Nope. That's interesting. I'm hyping up 2020. That's funny. I should have checked 2024. Bam. Oh shit. 2024. Beautiful. Damn, fam. You made me hype you up. And then you didn't even run the way I needed you to. All right, here we go. 2024. Bet. Now it's loading the Greeks. Now you just got to give it a moment. It's loading 23 million data points, right? You try to do something 23 million times to let me know how long that is going to take you to complete, fam. Right? We already have our strategy rules, right? We're running it on 2024, and we're going to see how well the strategy does. All of our strategies starts at, I didn't confirm, all of our strategies start at $100, right? And I want to see how well does the strategy perform with us giving it $100 and it being able to follow the rules. Is it going to do well or is it not? I don't know, right? We just built this out live with you, so there is no bias. I don't have no look ahead bias, right? So I don't know how well it's going to perform. What I do know is that you built a back test, and his back test is ready to run. So let's run said back test. So just give it a moment. As soon as it, I promise you, as soon as it loads and it gets all the data that it needs, right, then it's going to be ready to go. So imagine like we're loading an environment with 23 million different, loading an environment with 23 million different data points, right? And it has to be able to understand how it works. Okay, here we go. All right, it's pre-indexing the data for faster lookups. So just in a few more moments, it's what it's doing. It's vectorizing the backtest so it could put it in an array. Okay, here we go. Did I tell you? Oh man, the strategy crashed. It crashed and burned, y'all. And that's fine. This is what we learned. This is what we learned. We want to figure out why this happened and then adjust accordingly. Beautiful. Save and log. All right, let's look at what happened. We had 33 trades. We ended at $18. The log was saved. So our Sharp ratio is -3.5. What this measures is the returns earns on the unit per risk volatility. How it interprets it is a Sharp less than 0.5 is poor risk, right? We have negative. So this your strategy is losing money on the risk adjusted basis. A Sorrentino ratio. What this measures like Sharp, but only penalizes downside volatility. Why this matters: in upside volatility, big wins, but shouldn't be penalized. So our result is -0.72. That's crazy. Calamar ratio, what this measures is the annualized return divided by the maximum drawdown. The formula is -99 annualized return divided by the maximum drawdown. The system quality number, what this measures is the overall quality and tradability of your system. The Van Tharp scale, right? So we're not there. The maximum drawdown, at some point, the strategy lost 82, went from 100 to damn near as $18, right? The recovery factor, it measured the total returns divided by the maximum drawdowns. Our win rate was 30%. Our profit factor is under $1. The okay. The payoff ratio is 0.9. The Kelly, okay, there's just best trade was $13. Worst trade was 13. Our consecutive win streak was 3. Our consecutive lose streak was 6, right? Exposure time, 17%, and our average hold time was 2.6. So we need to improve a couple things for the strategy. All right, so what we're gonna do, I'm probably gonna run 2 or 3 back tests with y'all because I want us to be able to get this to be working. But again, our main goal was to understand SMA and EMA. We do that. This is just extra, right? Now review and let's discuss version 1 and what worked and what didn't. All right, beautiful. So we're having Claude Code go through the actual back test, figure out what worked, what didn't work, and how we can improve upon said back test. Beautiful. As soon as you output. So let's go look. Because we do have let's see what you say. Okay, exit reasons, time stop, mostly losers. Winners, best winners. The key problem is the time stop is hurting us. Most trades are hitting the 3 minutes maximum hold time and exiting at loss. The move isn't happening fast enough within the 3 minutes. Example of what I see repeatedly: we enter at 38, we peak at 43 at 2 minutes, and then we exit at 3 minutes. We're getting the move, but we're not hitting the TPs, then releasing it. The cloud width is too narrow. Many entries have the cloud width of 0.3 and 0.7. This is barely above the minimum, the threshold. The trend isn't strong enough. Looking at the losers versus the winners. Okay. And then losers had very narrow cloud width. The SMA is NAN on some trades. I see that the 12 SMA on several entries is in trade 1, 9, 10, 11, 15, so on and so forth. The momentum filter isn't working properly on the first candle of the day. The payoff ratio, the average win, is a lot less than the average loss. We need bigger wins. What worked is the TP. The puts are performing significantly better. And then the early sessions. Recommended changes. We want to increase the minimum cloud. No, okay, here's what I want to do. So let's increase the min cloud width to 0.12%. Let's find and fix the SMA bug and fix it. All right, hold on. What else do I want to do? No. I want to keep everything else the same because I think we're legit Gucci. I'm not gonna hold you. All right. And then the SMA period, let's go from 12 to 8 and keep everything else the same. All right, bet. Bet. So what do y'all think these rules adjustments are going to do? So what we're doing is we're making the minimum cloud width a lot more stronger, right? We're also going to be fixing the SMA bug because we noticed that some of the filters weren't working. It's getting the NAN. NAN is just the error that it couldn't compute, so we had to find out what the error was. Let me find the SMA calculation and the signal detection logic and fix the NAN bug. I see the issue. The SMA is rolling window, which produces the NAN for the first in row. We need to change the minimum cloud width from okay, the 12 SMA, and then also check the signal detection to skip when the wait, why are we skipping? Wait. Why are we skipping when SMA is NAN? Why not just fix the underlying issue? Well, let's find and fix it. Let's find and fix it, please, and thank you. So what I want to do is create a folder called backtest results. Within that folder, create 2024, 2023, 2022. Within those folders, create V1 baseline, and then move, do not copy, but move these files here. So I'm not even paying attention real quick because I want to make sure we stay organized. All right. When okay, it's false, we won't. Okay, let me check what happens. The issue is that the momentum bullish becomes NAN, not false when the SMA is NAN. This is if the cloud and the okay are still passing true. We need to fix it. Okay, bet. All right. Let's get it, shawty. All right, let's see what happens here with these adjustments. This should be interesting. This will be interesting. Well, I really thought I made the back test a lot faster. I'm not gonna hold you. Like if you were watching our previous videos, the back test used to take us damn near like 15 minutes, bro, to go through. So I made the back test faster, but it's just the loading of the data. Y'all just gotta just bear with me. It takes like 2 to 3 minutes to be able to load the data, but once we actually run the back test, it flies through it. So just bear with us as we load it. And it's gonna be flying through. All right, here we go. All right, here we go. Look at that. We fixed it, y'all. We did one little fix. Okay, but it's kind of giving back too much money. Look at this. We went from losing money. Look at this, man. This is one little fix, right? A couple little fixes. So 136 trades. We're now at $2,000. The strategy went from $100 to $2,068.54. This is the return. Our Sharp ratio, it got a lot better. This returns are positive, but the volatility is high relative to the gains. Alabama, y'all really shouldn't be in the conversation. Sharantino ratio 0.71. The Sharantino is 0.42 higher than the Sharp. Your wins are larger and more valuable. Variable than your losses. That's good. The Calamar ratio, what it measures is the annualized return. We have okay, so that's Gucci. Our system quality is 0.33. Where do we measure? We're at excellent right now. We went from terrible to excellent. Our drawdown is still kind of high, right? So at one point in time, the strategy went from $100 to 26, right? 24, 2406 type. Recovery factor, this measures the total return divided by the maximum drawdown. Your total return is 26 times the worst drawdown. Okay, now we're at 63% win rate, 86 wins out of the 136 trades. Our profit factor is 1.62. So what this lets us know, for every $1 that we lost, we're making a 162 back. So that's Gucci. All right, best trade. Okay, it's still kind of tight. Best trade was 166.74. Worst trade was 186.79. We had a 13 win consecutive win streak. Then we had a 5 loss consecutive lose streak. Our exposure time is 19%, and average hold time is 2 minutes. Now we're getting a C instead of heavy D. So that's pause. So that's what's up. So we're getting better, right? So we're improving it by our little adjustments here and there. You know what I forgot to do? Was the steps taken? All right, review and let's discuss. I'm not going to hold you. Like, I'm waiting to make sure that the U get into the playoffs. Use grep and arc to review. Then let's discuss. All right, so we're getting better, man. Not going to hold you. This EMA strategy may be one that like we are probably going to get better. So I'm going to do one more iteration. And we're going to see how much better we're going to get the strat. The fact that they're in is oh my goodness. The fact that that's even a conversation. Duke over JMU. But it's Miami over all of them. All of them. It's crazy. My fault. I'm just letting a little football come out. All right, but nonetheless, we are getting better. Our strategy is progressively getting better, right? When we first started, the strategy was laudable, right? It was fucking horrendous, right? Let's look at it. Negative 35% sharp, 33 trades. We started and we ended at $18. Now we're at, it's about the compact. And what does compacting mean? It's going to take everything that we've done this session and then throw it in its memory. Now we're at 136 trades, 2,000, right? So that's a hell of a flip. I'm not going to hold you. So I love the fact what we've done, and I think we can make it a little bit better. So I'm going to do one more tweak, right? And then after this last adjustment, we're going to call the video. And I really hope that y'all, okay, hold on. Massive improvement. Win rate damn near doubled, right? Final balance almost 10,000% better. Return to skyrocket. SQL, the system is Gucci, right? Exit. The best exit was at TP1, or 25%. And then we have good exits at TP2. Time exits are only 28% profitable. Stop losses. The time stops still hurt, 28% average. Or when we hit max hold time, we usually are losing. The calls are more selective but accurate. Monthly performance, that's what's up. But May and August are just a bit negative, so we got to improve those. Strong year. May and June and August were rough. The summer is damn near usually always rough. I'm not gonna hold you. What's still not working is the time stops. It's still losing. 28% win rate. Max drawdown is super high, and then stop losses. So extend the maximum hold time, add a trailing stop, or tighten the filter a little bit more, right? So this is what I'm going to do. First, let's get organized. Let's get organized. Find the parms for V2. Then create the folder, example, V2, updated params here. Then move the files to 2024. All right, beautiful. So what we're going to do, I know y'all just bear with me. Let me just try to make this as good as possible. And then if I need y'all, just go to, all right, bet. Please just get the work done. All right, so what we're going to do, my fault. All right. I'm thinking about, instead of 0.12, let's make it 0.15, right? So let's make that a little bit tighter, right? Our 8 estimate, I kind of like that. I'm not, let's drop it down to 5. I'm not going to change 2 and 12 because I think these are our golden zones, right? This is our Goldilocks zone, right? So I'm not going to change that. And then, okay, what I'm going to do, I'm going to give you 2 minutes to make up your mind, and then I'm going to give you 12 minutes, so an extra 2 percentage points there. So that should be a lot better. So here's what we've done. I have made the minimum cloud width a lot more tighter, right? So a lot more restrictive. So we're actually for more quality, but I have given the trade or the strategy 2 more percentage points to be able to figure out what it's going to do, but I dropped the maximum hold time. So let's see what impact that does. All right, review what we have done. Reason I did that is because it's going to compact. I knew it was going to compact. So, all right, now let's run our new backtest. So we're probably going to stop here, right? I don't want the video to get too long. We're just approaching 90 minutes here, and this is supposed to be 45 minutes. So I'm sorry. But again, we're making good strides. We were able to actually understand EMA, understand what it means, right? Understand SMA, understand what it means. So when we're building out strategies, right? When we're building out algo systems, we can really understand, okay, if I tweak this, if I update this, if I change this period, I can actually understand what it's doing, right? Because I mean, what's the fun in being able to just go buy an algo when you could create your own, especially with the AI environment that we're here in now? And you saw what we did. Like, it literally took me, I'm not going to hold you, a little bit longer. Normally it takes me like 10 to 15 minutes, maybe even 30. But it took us under 45 minutes to create the strategy. So if I can do it, I know you can do it, right? So we're loading our back test. It takes a bit, but you see, once the back test is loaded, it takes off. Like, it takes off. Like before, no, I'm not even gonna say it because, I mean, who y'all think is faster, Trevor Noah or Usain Bolt? Yeah, since I'm waiting, so I feel like before my back test was like, I'm not even gonna say because both of them, but these are like 2 different. Okay, let me shut up. Here we go. So making it more restrictive means that there's not that many trades. Ooh, this is not where it's at. This is not where it's at. Very good. It went to B plus. But again, look at the trade count. So what I did is just made it a lot more restrictive, fam. I know I said that was going to be the last one. So 12 is our Goldilocks spot. I'm not going to hold you. So I'm going to keep it at 12. And then keep everything else. And then let's see what happens. So we got better. What was the one? Okay, 63%. But 27 trades. All right. Let's run it again. Let's run it again. This is just slight work. All right. Do the same here. I just want to file that away so we can just keep our reference. All right, backtest is loading. And then I have one AI kind of make our backtest and the other AI to be able to make sure that we can file it away and proper, right? I love it. Right, so I can know, all right, this is what this version carries, this is what that version carries. You feel me? I bet you're good. I need y'all just to let me know that Miami is in, man. Everybody else could kick rocks. Let me know we're gonna go do battle, man. All right, we're loading our back test. Again, this will maybe be the final iteration. Because again, the video's gotten a bit too long. I don't want it to cross over 90 minutes. We already went through 3 versions, right? This is okay. Here we go. Ooh. Okay, we're at 51 trades. What is now? We're at A plus. What's the win rate? What's the win rate? What's the win rate? What's the win rate? Real quick, 60%. Win rate is less though. All right. I think. All right. I know I said one more. I'm just gonna do one more. Okay. No, I didn't ask you to run it. Review and let's discuss. Use grep and awk. Why did we get less trades here? Well, Indiana's #1. Shout out to the Hoosiers. Yeah, boy. Do the same here. We're just gonna get that ready, so by the time it's ready to go, we can just slide. Well, Indiana doing their thing. I ain't gonna hold you. It's real. All right. Why fewer trades is the stricter. No, I'm not at 15. I'm not at 15, am I? No, it's 0.12. Yeah, 0.12. All right. Okay. Oh, that's interesting. Maybe it's because I went from 5 to. Okay, let's go back to 8. Okay, let's go to 8. The shorter hold time. Okay. Let me do 3.5 minutes, bro. That's the max. That's the max I'll do. All right. So the metric, okay. All right, the shorter hold time, the tighter cloud gives you better quality trades, but fewer opportunities. Okay. I saw what I did, and let's run this version. All right, so this is probably going to be the last iteration that we're going to run. And then we're going to get prepared to do our third video. Our third video is going to be on VWAP, the volume weighted no, VWAP or ATR. Average true range or the volume weighted average price. I'm pretty sure maybe it'll be one of the two. But nonetheless, version our episode 1 for our site is going to be in the comments and description. So if you want to check that out, and then version 2, which is what we're doing right now, which is EMA and SMA, was a chef's kiss, right? So we learned a lot. We were able to make a strategy. The strategy is viable, right? It's just a matter of being able to optimize it to get it to a point where it works well. But the main aim here, right, was to be able to understand SMA and EMA, and I think we did do that well, and we do understand how it works. What I'm doing right now is just a bonus with regards to being able to create a strategy live in front of y'all, right? And being able to optimize it a bit. So the highest we've seen was the strategy go from $100 to $2,900, give or take. And right now, what I want us to be able to do is we're going to run our last version of the back test. And then after that, okay, let's see what's up. Okay. All right. Here we go. Strategy. All right, we're back to parity, right? So this is where we're going to stop here. Let's just go over the last set of numbers. Oregon went to number 5. All right, we had 136 trades. We went from $100 to $3,500. Sharp ratios 3.2, Sarantino's 0.75, Calamari's 6.38. Our system qualities 3.7. How does that range? We're under excellent, so that's good. Our drawdown is 50, so that's a lot less, right, than what we've seen before. Win rate is 66%, so that's the highest we've seen. Profit factor is the highest we've seen. So we're doing some things, right? And so what I'm going to do is I'll pick this up on another. Oh, look at this. A lot better. The best trade, 258. Worst trade, I mean, it could be better, is 160, but it's not close, right? We do have some distance there. Maximum consecutive win streak was 13, and then 5 was a loss. So we are getting better, right? So what I'm going to do is for another video, I'll come back and finish off Cloud9 strategy. So y'all just pay attention to that. But for right now, it is your boy Creative. We'll be back again with another episode. And if you're not already, please make sure to like and subscribe. We will be back again with more with our KreativeU series. I appreciate you.